Let us explain how a Japanese operating lease works. This is Mr. Ide, a company owner. His company is currently earning a stable profit, but he is concerned about company management and the business in the future. Isn't there a good solution? Mr. Hoshi, an advisory tax accountant, appears. He proposes using a Japanese operating lease to realize a stable management plan. Let's see how this scheme works. First, a special purpose company, or SPC for short, enters into an agreement to lease an aircraft worth about 10 billion yen to an airline company. For funding, about 7 billion yen is borrowed from a financial institution. The remaining 3 billion or so yen will be solicited from corporate investors for investment. Then, with this 10 billion yen, the SPC will purchase the aircraft from the manufacturer, becoming the owner of the aircraft, and then lease it to the airline company. All aircraft are subject to depreciation because, unlike real estate, there is no land involved. In addition, the use of borrowing provides a large depreciation benefit with less capital. Mr. Hoshi explains the revenue and expenses of a Japanese operating lease to Mr. Ide, who is now very interested. Revenue from a Japanese operating lease is composed of lease payments and proceeds from the sale of aircraft. The lease payments are a fixed amount, like apartment rent. On the other hand, expenses include interest on borrowings and depreciation. Since depreciation is calculated using the declining balance method, large expenses are incurred in the first half of the lease term. Therefore, the first half of the lease term will show a loss, and the second half will show a profit. This loss and profit will be distributed to the corporate investors that invested. However, under the tax change in fiscal 2005, the amount that can be recorded as tax deductible is capped at the amount of investment. So the actual profit and loss will look like this. By offsetting the loss in the first half of the Japanese operating lease term with regular business profits, the investing company can defer profits. Here, Mr. Ide came up with a question. What will happen to the money that was invested? Borrowings will be repaid with lease payments received from the airline company during the lease term. Then, with the proceeds from the sale of the aircraft at the end of the lease, the SPC will recoup the money that was invested. Mr. Ide was impressed, but had another question. Is a Japanese operating lease only for aircraft? Good question. It can also be applied to large shipping vessels and marine container boxes. Now Mr. Ide understands how a Japanese operating lease works. But who can he count on to arrange such investments? Mr. Hoshi recommended FPG, a leading Japanese operating lease company listed on the prime market of the Tokyo Stock Exchange. FPG fractionalizes the Japanese operating lease to make investment easier. For those who seek tax planning, the company also provides support for making an optimal tax plan. By smoothing profits and securing retained earnings, one can also facilitate smooth business succession. Convinced by Mr. Hoshi's recommendation, Mr. Ide consulted FPG regarding Japanese operating lease. He decided to invest. Now he can make a stable management plan that looks ahead to the future. For details, search FPG.